everyone, and welcome to another Altos Trading Live strategy session with Jeff Tompkins. This is your host, Richard Van Rich. And boy, we're excited to have with you guys tonight. I know it's been a couple weeks since we've been on. I've been a lot of traveling, a lot of things going on, and missed you guys. So glad to be back here with you. You know, as usual, Jeff schedules these things perfectly, looking at what happened in the market today. So you guys will definitely have great timing there. We're glad to have you here. If this is your first time on, you'll notice that your microphones are all muted, so that's all we can hear Jeff and I talk. But there is a Q&A box located at the bottom of your screen if you move your cursor, and you can put any questions in there, and we'll see those and answer them throughout the session and also before we sign off at the end. If you do have to hop off for any reason, this is recorded. Be available in the members area later tonight and sometime on YouTube tomorrow. So if you're joining us on YouTube, please like and subscribe so you can see some of our other videos that are happening. And if you have any questions about your account, access to trade trend, trade alerts, anything like that is personal, email support@altostrading.com, and one of our support team members will get to those sometime tomorrow. So with that being said, let me bring on Jeff. But before I do, I guess let me hit the disclaimer. Altos Trading LLC and Trade Trend Zillion software is intended to be used as information service for subscribers, and it includes opinion as to buying, selling, and holding various stocks and other securities. However, publishers of Altos Trading, Trade Trend Zillion software are not brokers or investment advisors and do not provide investment advice or recommendations directed to any particular subscriber or in view of the particular circumstances of any particular person. I say that 5 times. Altos Trading LLC, including its owners, do not accept responsibility for any decisions made by subscribers using the software, and subscribers to the Trade Trend Zillion software or any other person who buys, sell, or hold securities should do so with caution and consult with a broker or investment advisor before doing so. About that. With that being said, let me bring on Jeff. Jeff, are you there?
Hey, you ever get tired of reading that?
I'm telling you, man, it's like I'm almost memorized a little bit. And I apologize for not having my camera on, guys. It's a little dark here. I got to get some more lighting. It's like calling in from like a Game of Thrones episode, so I don't want to do that.
Yeah, I read something about like the whole rationale behind filming Game of Thrones in that lighting. And I don't recall exactly, like, I mean, they obviously wanted to fit the scene, you know, like the period and stuff, but
yeah,
kind of crazy.
I don't like it. Yeah, I guess the new show House of Dragon just finished up, and there was a couple episodes, I guess it got a little bit dark, but I feel like it was pretty bad, especially in that last season of Game of Thrones, where you're just like, you can't see anything. Like, didn't make any sense.
Yeah, you got to turn all the lights in the house off. Well, I got the same issue. It's like winter rolls around. Winter's coming, right? It's like I have terrible lighting in the office, and so I need to get some better lighting.
It's like the time change kind of messed it up for me on my side.
Well, you'll get to see us again. Don't worry, guys.
Probably help the conversion for people staying on longer.
Well, good to say everybody, or at least everybody's name. See a lot of familiar names, and we were in Orlando for the Money Show. What was that? Week before last week? At least track of time. Been traveling. I got in late last night, so I was on a plane all day yesterday and just trying to get caught up in things. But what a great day to come back to the office. You know, obviously a really bullish day in the markets, and we'll talk about that today. So let's go over what we're going to cover. We'll do our market overview. So we'll talk about what happened today, why it happened, what implications it might have for the rest of the week and beyond. We'll take a look at the 36-month moving average, where we closed out, because I think the last session we did was prior to the close of October. So we'll see where things ended up there and how they're looking for November. We're going to, in a previous session about a month ago, we covered price action pivots. And it's one of our core strategies. And I think this is a good time to focus in on that again and look at current opportunities. So we'll actually take a look at some live opportunities on the past session. Again, about a month ago, we went through the strategy, how to spot it, and all the rules associated with it in terms of trading it. So if you missed that one, you can find it on our YouTube channel. But we never really got into finding live opportunities for the price action pivot strategy. So I'll explain the setup again as we kind of look at current opportunities, but we're likely to find some good ones this week in the midst of this bullish reversal that we've had. So we'll spend some time doing that tonight, as well as ticker roundtable and wrap up with Q&A. All right, so let's go ahead and start with our market overview. Let me make sure I got current data for today. So we've obviously had a big shift in trend and momentum because we've been so bearish. Our sentiment gauges are still showing trend kind of in the mid range. We really need more follow through to push into the bullish range here. But we're getting a shift in ratios, in the ratio of buy to sell. So we're getting more buys, which is bullish from our algorithms. And let me go ahead and pull up the S&P. And let's take a look at what happened. So obviously we had a core CPI come out this morning for the month of October. And finally, we get basically the expectation of inflation for the consumer price index for inflation for October. The actual number came out lower than analyst estimates. So that's good. And it's indicating that inflation has likely peaked, and with the corresponding Fed rate hikes will likely not get any higher and start to reverse back to the downside. So that's really the catalyst behind the big move up today. The S&P closing up over 5.5%. The NASDAQ really did well. We'll take a look at that here momentarily. But big bullish reversal. And so as we look at the levels on the S&P for today, there's kind of an interesting scenario here. So typically when we get a strong intraday move like we did today, following a shift in an economic data point like CPI, which right now is the hot topic, right? It often is not, it's relatively short-lived. It often doesn't follow through for very long because the underlying problem is still there. We still have high inflation. It's still going to take a significant amount of time for that to come down. There are likely going to be more rate hikes. So it's kind of more of an immediate reaction than it is something that is going to have more of a sustained impact on the markets. But the other side of the coin there is that we've already sold off so much in the markets this year. So we've peaked to trough, hit levels where it's attracting enough buyers that despite the fact that what I just mentioned with the a CPI reaction being relatively short-lived, this could have somewhat of a greater impact. And as we look at the horizontal levels, we've broken through some key areas, but we've got one really big one overhead to get through that could occur this week, as early as this week. And if it does, that's really going to open the floodgates for higher prices through the end of the year. So let's take a look at those. And we formed a really solid base on the S&P, on really all the major indices. And that also is very helpful from a bullish standpoint. So let's look at the support base first. Let's go a little higher, more like the half-century market, 3650. But really 3600 is one I want us to pay attention to as well. So I'll just circle that. And 3500. All right, so this support base is now much more likely to hold through the end of the year. And if it does, that one's more bullish implication for 2023 as we move into the next year. So we really need to stay above this support base on the S&P between 3,500 and 3,650. Okay, and you can see historical bullish rotations off of this zone. And what's also significant is that we've broken some key resistance levels. And so if you notice, before core CPI came out this morning, it wasn't looking so good, right? We had look like what was another bearish rotation lower, and 3,700 is also a support level to keep an eye on. It looked like we were headed back down there, and then we get this big surprise with the CPI report this morning. So these are all now lower levels of support, but this 3,800 level prior to today was significant resistance. Okay, so if you look at prior tests of this level for both support and resistance, and being a strong century mark, it holds a lot of significance that we broke through this level today. Considering we were way down here, the close yesterday, and headed towards 3,700. So now this resistance has become a new support level at 3,800. Not only that, we broke through another century mark at 3,900. Okay, so that was also resistance, which is now support. So what we're building here is multiple layers of very significant support. All right, so what do we got? 1, 2, 3, 4, five, at least 5 very significant levels of support. We closed near the highs of the day. Okay, so things are looking much different all of a sudden. Now, we have a major millennial mark to get through. And this is what we're going to be watching this week, 4,000. So can we get through 4,000? This is our nearest resistance level that we want to be watching. Because if we can break 4,000 in November and stay above that level, and if we do break it, we might see a break and a retest and a move off. And in particular, if we see that occur, then we're going to be bullish through the end of the year and potentially into 2023. Also, we've got obviously the midterm elections impacting markets, and that the dust is starting to settle there as well. So keep a close eye on 4,000 tomorrow. We could encounter it, but when we see such a significant intraday move like we did today, over 5.5% on the S&P, it's hard for the markets to sustain that again for another day. So we might see a bit of, there's going to be profit taking. There's going to be, people that took advantage of this move today that are going to wait and kind of sit on the sidelines and wait and see what happens. So that could, depending on the magnitude of that, cause some stalling in this 3,950 to 4,000 range tomorrow and through the rest of the week. That's one possibility. The other possibility is we blow through 4,000 tomorrow. If that happens, then the bullishness scale just goes through the roof. So again, keep a very close eye on 4,000 as resistance for tomorrow on the S&P. We are out of the red divergence cloud. We haven't printed a green divergence cloud yet. And we also got a pending buy on the SPX. Okay, so if we follow through, that could be a triggered signal. Entry price would be, let's take a look. So again, this is still pending. If we hit 39.6660, become a triggered signal. So short term, looking quite bullish. We've seen shifts in the particularly the Dow in the short, medium, and long-term trends. All right, so things are changing here, and just be aware. So let's take a look at the NASDAQ 100 ETF, the Qs. And we'll come back to these two charts. I don't want to blend the market overview with price action pivots, but we're going to come back to these charts and look at the price action pivots. Okay, but same thing. Little different scenario with the NASDAQ. So NASDAQ, we got over a 7% move to the upside today. I mean, that's incredible. But we have near resistance to contend with on the NASDAQ. But that's a good thing, because since market, indices tend to move in tandem, obviously at different magnitudes and percentages, but if we get a breakout of this resistance level, on the Qs, it's right around 285. Then, in particular, if we get it in conjunction with a break of the 4,000 millennial mark on the S&P, again, very, very bullish. So what we're looking for on the NASDAQ, on the QQQ, is a break of this 285 resistance zone. Let me just mark this. Resistance. And so see how we came up and we didn't quite hit the highs from late October, but see how we're in this range. But if we can break through this, this is now going to become support with the gates open for another leg higher. If this holds as resistance, we've got a support zone between 255 and 270. Okay, so we're going to want to watch if we can't get through 285. This might, potentially create some buying opportunity if we rotate lower into the zone again. We've already dipped into this 1, 2, 3, 4 times since mid 2022. So it's likely to hold, but we'll need to wait and see. And we could know as early as tomorrow on the NASDAQ if we break through this significant resistance. Okay, so let's take a look at the VIX. And holy cow, the VIX is on its way back down to the low 20s. We never thought we'd see it happen. Right, so back on our early October session, and since then, but particularly then because we were up in the 34 to 37 resistance zone on the VIX. We talked about how the VIX spends very little time up in this zone. So it's either going to peak or spike up into that zone, peak, and then rotate lower, or it's going to blow through it. So this, when the VIX gets in this zone, assuming that the indices, the S&P and the NASDAQ and the Russell, are approaching support and then rotating higher, is a very good clue of potential reversals after a sell-off back to the upside. And sure enough, that's what occurred. Okay, so what level are we watching now? Well, we encountered it today on the VIX, 23. So tomorrow and through the rest of this week, we want to see, can the VIX get close below 23? We've dipped below it today, but we didn't close below it. We closed at 23.53. Okay, so we're watching that. If we get a good close below 23, then the likelihood of us getting back down to 20 or below by the end of the year is higher. And if we close on the VIX below 20 by the end of this year, so the end of next month, and assuming we don't get a bad inflation report, like it doesn't reverse back to the other way, which is unlikely. Once it comes in under estimates, it tends to kind of follow that trend. But if that occurs, then we could be looking at getting out of the bear market in 2023. Still too early to tell, but it's going to make next year look more promising. All right, so those are the key levels to watch on NASDAQ, S&P, and the VIX. So I'll pause for any questions, and then we'll go back to the S&P and the NASDAQ to look at price action pivots and see how we can use those.
Let's see. Michael kind of brought up a point. I'm not sure what it's showing, but he's saying on the SPX triggered on the weekly chart of a trade trend when it exceeded 39.25. So it must be some sort of a, I don't know if it's a warning or not. He's looking at a weekly chart. I think that's probably going to be on toss.
Okay. Yeah, we can go take a look, because actually we need to look at the monthly as well for the 36 period moving average. So let's take a look at the weekly. Yes. Good spot there, Michael. And you can see the last buy we had on the weekly was back on June 27th, or the week of June 27th. It took a few weeks for that one to trigger, but we got a big move up. Let's see, the triggered entry would have been roughly around this level, right around 39.50, and we peaked up above 4,300. So, about a 350 point move there. Interestingly, this candle, so we've got this buy that triggered, and so we just got another one a couple of weeks ago, and again, entry would have been right above 3,900. So that one triggered this week. So yeah, this one could follow through, but again, we've got to get through this 4,000 level. Really got to get through it. And I think there's a good chance after what happened today, but we might see some, I guess the key takeaway here, what I was kind of getting with earlier about the reaction to the CPI, coming in below analyst expectations this morning, is that, it was such a dramatic reaction that we might see some profit taking and stalling at these levels. So again, the key takeaway is be a little cautious. A lot of times when we get such significant bullish moves, people try to jump on the bandwagon and thinking it's going to follow through for another day or another week, but because it was such a big move, we want to be a little bit cautious. Like if you look at past weekly moves of this magnitude, here was one, here was one, here was one, here was one. Look what happens the next week. Not too bad, but not anywhere near that move. A little bit of, you know, a down week. Not much of a move. So see how if you look back at similar magnitude moves that the following week, or the week's not over. Obviously, this week is still printing. So again, we could get an even larger move. In fact, if you look at the March, first week of March, the range of this candle was larger. So this could keep running. And so that's why I'm saying watch 4,000, because what would be significant is if we can close above 4,000 by the end of the week. But yeah, good observation there, Michael. And while we're on the SPX over here, let's take a look at the monthly. I gotta change my studies. Bollinger Bands. Okay, so for those of you who attend every week or watch our recorded sessions, you know that we very closely monitor the 36-month moving average. So we're looking at a monthly chart, and we're going to change this to 36, just a simple moving average. Particularly valuable during bear market conditions, major market sell-offs, because when we mean revert into the 36-month moving average, historically speaking, we often see significant moves back to the upside from this level. We're getting a little bit of whipsawing around here, around the average, right? So we've got a strong bearish close below. We always want to lend more weight to the more recent price action, right? So September, we get this bearish month below the moving average, and it looks like we're just going to start tanking to the downside, but we got a bullish reversal last month. And so again, since our last live session we did before the end of October, I want to make sure to recap what happened here. We closed above that average this last month, and now look what's happening. We get a false break below. CPI was the catalyst that reversed the monthly trend in November so far, and we're now trading back above. So this is also very bullish. Okay, so this is promising. On the NASDAQ, we still got a ways to go to get back above, but we're only about a third of the way through November. So it's possible we could get back up close, if this bullish run can continue, back up close to the 36-month moving average, or maybe even above it. So we'll just have to keep an eye on the NASDAQ. Looking at the Russell, we're right there, right? So we closed just slightly below, but if particularly, and this isn't a confirmed pending buy signal on the monthly chart of the Russell, because we're still within the month of October. But if this ends up holding as a buy signal by the end of November, and we close above the 36-month moving average on the Russell, that is also very bullish, right? Because we're looking at small cap. They're going to be more significantly impacted by high interest rates and inflation, the small cap companies. So we also want to keep an eye on the Russell, and we'll start adding the Russell into our market overview, because now is a particularly important time to keep an eye on small caps and how they're, how the index is doing as it relates to inflation and higher interest rates. So very interesting here. We want to let me just actually zoom in. So of course, the 36 period moving average is a dynamic moving average. It's not static, it moves as price moves, in comparison to a static horizontal support or resistance level. But right now it resides at 1872.78. So price is just right below it. But I really like to pay attention to the century marks. So 1900 is a bit above the average. But if you look at past monthly resistance on the Russell, we're getting a lot of it, previous support, right around this 1900 level. So on the Russell, although 1900 being a static horizontal resistance level currently is above the 36-month moving average, if we close above 1900 on the Russell this month, then things are looking really good. We might be out of this bear market, right? We're still in high inflation. Economy might still be in trouble. We still may, dip into a recession, a lasting recession. But always remember, the stock market's not the economy, and it tends to recover earlier. And we've talked about this, the reasons why in past sessions. It tends to recover earlier than the economy. Look at the housing crash in 2008, right? The stock market lost over 50% of its value in 6 months, the second half of the year. But then it recovered very quickly. The housing market didn't recover nearly as quickly as the stock market did. So it tends to lead the economy. The stock market's not the economy. Okay. Any other questions, Richard?
No, that's all I got.
Okay. Apologize, my voice is a little hoarse. I'm probably breathing the dry airplane air all day yesterday. Okay, so let's go back to actually let's go back to the S&P 500. And let's look at some price action pivot opportunities that could help us spot these types of reversals. So just to recap how the price action pivots work, we're looking for a bullish price action pivot. So the forecast would be to the upside or an uptrend. It's going to follow a move down in the asset, right? So we're going to see a series of lower lows. And so for a bullish price action pivot, we're looking at the lows. We're not looking at the highs, we're looking at the lows, right? And we're currently looking at a daily chart. If you're doing this intraday, in fact, I don't do a lot of day trading, but I did actually day trade the E-mini S&Ps using price action pivots today and did really well. And I'm considering holding some of our sessions, since the futures markets are open when we hold our live session on Tuesday nights. Normally we do it Tuesday nights. Doing some live trading with the price action pivot strategy, so you guys can kind of see it in action on an intraday time frame. So I traded off the 5-minute chart today. So regardless of the time frame, whether it's intraday or like we're looking at right now, the daily time frame, you're still looking for the same thing. And that is, if markets are moving down as they were last week, right? We're mapping out the lows, right? And what we're looking for is a shift from lower lows to a higher low. So that occurred on this candle here. And that's actually going to become our candle number 4. Once we get a higher low, the pattern has not yet completed, but we want to pay close attention because this could become our potential pivot candle. Okay, so we're looking at, I want to use this as an example because it's playing out currently. Once we have these 4 candles, on the next candle, we want to see, do we still make a higher low? And in fact, we did. That becomes candle number 5, the final candle in the price action pivot setup. So we just go back and we mark these 1, 2. Was our potential pivot, is now our confirmed pivot. 4, 5. Now, that tells us that the expectation or the forecast is the asset's going to move up. Now, it's going to move up beyond what point? Well, there's 2 methods for that I've created for you trading these. For a bullish price action pivot, you can either use the high of what basically to the right of the pivot candle, which is this candle, or you can use the high in the entire pattern, which would be up here at this candle. So so that would be, the candles to the left of the pivot candle. If the high to the left of the pivot candle is higher than the high of the right candlesticks to the right of the pivot candle, that's going to be the more conservative approach. And you're going to probably get fewer triggered trades. If we use the high of the final candle in the pattern, or in some circumstances, it might be candle number 4. Oops, sorry, I actually drew that on the wrong candle there. Should be this candle. Candle number 4, if that's the high, whatever the 2 candles to the right of the pivot candle. So if we break that high, we could, and the forecasted trend direction is to the upside. So we're shifting from, and that's what we call a pivot, we're shifting from a downtrend to an uptrend. Depending on which entry method we use, we could get in down here around 38.20, roughly 38.30. Or we could have waited and we would have been triggered today using the high of candle number 1, which is the entire pattern. So we're in the midst of an active bullish price action pivot trigger. So we have the setup and we have the follow through. And follow through using method number 1 and using the high of the candles to the right of the pivot candle would have triggered us earlier this week, right, on November 8th. A trigger today using entry method number 2, where we use the high of all 5 candles in the pattern, would have been today. So you would have gotten in quite a bit lower, but this is more of an aggressive entry. But beautiful setup so far. In fact, using candle number 5, we're probably at our initial profit target, because we're looking for equidistant move between our entry and our stop loss, which we can put below the low of the pivot candle. So yeah, we would have hit our profit target today if we used the high of candle number 5. Using candle number 1, we've got a ways to go. But how would I choose which to do? Well, one, as I mentioned, is conservative versus aggressive. But if we get a lopsided, what I call a lopsided pivot, right? So this is a pretty, let's see here. This is a pretty even pivot. Oh, sorry. This is a bearish pivot. It's pretty even, a little lopsided. This is more of a lopsided pivot. If it gets too lopsided, I will use in the case where the high of candle 4 or 5 is lower than candle 1 or 2, I'll use the high of candle 4-5 to enter. Okay, and you can see why that is, because then we have more room for the one-to-one risk reward ratio. And that's what we're looking for. We're looking for a risk reward of 1-to-1. So this one just took a few days to play out and be successful. Worked out very nicely. Let's take a look at the NASDAQ, see if we've got one on the Qs. Okay, so again, we're just mapping out lows as markets are moving down. So you can see these that I've just mapped, we've made a series of lower lows. But then on November 7th, that's the day everything changed. November 7th, we make a higher low. Okay, so this becomes our potential pivot. Potential pivot, right? Candle number 4. Now we're just waiting to make sure that the market sell-off doesn't resume and we break the low of this potential pivot low. Well, it didn't. So this becomes candle number 5. This is 1 and this is 2, right? So a bit of a lopsided price action pivot here. So we can either use the high above the high of candle number 5 or above the high of candle number 1 for our entry. So we also have a triggered price action, bullish price action pivot on the Qs. And depending on where you put your buy stop order, if you used the entry method of candle number 5, you may not have gotten triggered because we got a gap up. We did get a move lower. It probably would have been pretty close, but certainly using the high of candle number 1 or the high of all 5 candles in the pattern would have gotten a trigger today. Speaking of, if I didn't take a trade off of this bullish price action pivot on the Qs, but if I had, I probably would have taken profits today on a portion of the position, being that we ran up into this resistance level that we previously mapped out. And then I would move my my stop loss to the price that I entered, to a break-even price, to lock in profits and reduce risk on the remainder of the position. So 2 really nice bullish price action pivots. They're on the S&P and the NASDAQ 100 ETF, the Qs. Let's actually take a look at the Russell, see if there's one on there as well. I haven't looked at the Russell yet. Okay, so let's see here. Making a series of lower lows. This is where everything changed. And boom. All right, so we've got candle number 1, candle number 2, our pivot candle, candle number 4, candle number 5. Now this is, again, a lopsided, pretty lopsided bullish pivot setup. We wouldn't even be triggered probably quite yet if we used a margin above the high of candle number 1. If we used candle number 5, we would have been triggered and our stop would have been down here below the pivot candle. We would have probably nearly gotten stopped out and then reversed and hit our 1-to-1 risk reward profit target level today. So again, depending on which method you would use, it may not even be in a trade yet on this one if you use the hive candle number 1. But because this is so lopsided, as I mentioned, I would use the hive candle number 5 to give more room for the one-to-one risk reward, so that the Russell doesn't have to run up so much if I use the above the hive candle number 1. So this one looked good as well. And again, using the hive candle 5 would have likely taken us out of the position with a one-to-one risk reward profit today. So I used this and did several trades today in the E-mini S&Ps. Didn't have a losing trade. I think I put on 2 or 3 trades and did really well today on a 5-minute chart. So it works really well intraday as well. So we've got about 15 minutes left. So I thought we could open it up to ticker roundtable and take a look at any that you guys want to check out and see if we have any price action pivot setups on those that we can analyze, and we want to look at support and resistance as well, because I particularly like to take these off support levels for a bullish price action pivot, or off resistance for a bearish price action pivot. And I also like to look for trade trend buy and sell signals that occur within the setups as well. So we can kind of run the analysis on some. If you guys have any that you'd like to take a look at, you can go ahead and put those in the chat box. And while you're doing that, let me grab a drink of water real quick.
Let's see. It looks like there was a buy trigger on Amazon. Could you maybe take a look at that one?
Yeah, is that a price action pivot trigger or a trade trend?
Trade trend. Maybe
Okay.
there's
It looks like we got a pending buy today on Amazon on the daily. Hasn't triggered yet, so that the pending entry price would be 99.27. So just above the high of the candle here, right about there. And we don't quite have a bullish price action pivot yet, but this is a good one to take a look at. Right, so obviously, big sell-off on Amazon, and we're making a series of lower lows. And this is how the price action pivots setup can help keep us out of false reversals. It looked like here we might be reversing, right? We started to make a higher low, but didn't occur, and we didn't get the follow through above the highs of the candles. So it kept us out while Amazon continued to sell off. So we made another lower low yesterday, but today something changed, right? We made a higher low. So this could be an interesting one to watch. So we've got our potential pivot. So right now, this is just a potential pivot. Why? Because we need 2 candles to the left and 2 candles to the right for a bullish price action pivot with higher lows. So this is candle number 1, candle number 2, potential pivot, candle number 4. We need one more, and it's very likely, because it's unlikely we're going to post a low below yesterday's low, that tomorrow could be candle number 5, right? In that case, because we've already posted a high greater than the left side of the pivot setup, we would use the high of candle 4 or 5, whichever is greater, as our entry for a forecasted directional long trade. So once we've determined that, if that occurs tomorrow, there's something we want to keep a close eye on, and that's what? Horizontal resistance. So I'll go back on the chart and look for significant levels of resistance, because I don't want to trade into resistance, right? So I want to make sure that I'm not taking a long setup, bullish price action pivot right into a strong resistance level. And you can see we've got one here right around, let's see here, 10, little like right around 101, 102, right? So we don't know what's going to happen tomorrow, but maybe we get another bullish day and we get a close, let's say above this resistance level. That would make for a pretty nice bullish price action pivot. So we don't know what's going to happen, but let's say we move up again tomorrow and close, let's just say right here around 102.50, right? So then I can use the high of that candle to go long Amazon. And you can use different stop levels, based on your comfort and risk tolerance and things. Particularly if you've identified a resistance level, you break through it in the bullish price action pivot, close above, you follow through with the anticipated move. You can also use because this would, if that occurs, would become a support level. And that could be used as your stop loss level. That's a more aggressive stop loss. I like to give it more room by using the low of candle 4 or 5, or ideally the price action pivot low. But sometimes those are pretty wide. In this case, that's a pretty wide range between a potential entry and the low. But Amazon's also a volatile stock. It makes pretty significant moves. So it should all be taken into context regarding the volatility of the stock and those types of things. So yeah, we did get a pending buy. So this could be an interesting one if we get a completed bullish price action pivot and a triggered buy. I love to look for that confluence between a trade trend triggered buy and a bullish price action pivot, or a trade trend triggered sell and a bearish price action pivot. And by the way, while we're on this, I'll just show you the bearish price action pivot, right? So before we reversed, or in the midst of reversing, it's not confirmed yet. So see how we're making a series of higher highs, and then on this candle, everything changed. We start making a series of lower lows. Now this one would have been difficult to trade unless we use the low of candle number 1. Right, so here's candle 1, there's candle 2, we're making higher highs. Here's our pivot candle. And then on candle 4, we finally make a lower high. And confirmed, we make another lower high than the pivot candle. And there's our pivot. So our potential entries would be low of candle 1, because that's to the left side of the pivot candle, or low of candle 5, because that's to the right side of the pivot candle, which is the lowest low in the price action pivot 5 candle setup. But we gapped way down. So if you use the low of candle 5, you wouldn't have been filled. If you use the low of candle 1, beautiful trade, beautiful short setup. And we haven't had another price action pivot and until we actually haven't had another one yet since this sell one. We will likely have a confirmed bullish price action pivot tomorrow if we get another higher low, a low that's higher than the potential pivot candle here. So that's how a bearish one works. All right. Any other tickers?
Yeah, I got Microsoft came in.
Okay. All right, so let's take a look. So we had a triggered buy today on Microsoft. Big move up over 8%. There was the pending buy from 2 days ago. Triggered today. Let's see if we have we do have a bullish price action pivot here as well. All right, so we're making a series of lower lows. So lower low, lower low, lower low, lower low. Then we get a higher low. So now we're paying close attention. And we get a confirmed higher low. This one happened to come in the same day the pending buy setup did. All right, so let's mark these. So this is candle 1, candle 2, pivot candle, candle 4, candle 5. This is a very even price action pivot because our highs from candle 1 through candle 5 are very close together. Now, from a price action pivot standpoint, this one, may not have been triggered depending on where you entered your buy stop order, because we did get a pretty significant gap up, right? So I still would have taken this one with the gap up, because if we look at our one-to-one risk reward from our entry down to the low of our pivot, it's a relatively small amount comparatively to our profit taking level. So it's just a little chunk of that. So I even though this one did gap up, I would have probably still taken it. I didn't spot this one on Microsoft, but and then we also got the trade trend triggered by it. Yeah. And it looks like roughly, I didn't calculate this exactly, but we might be pretty close to our where our profit target level would be close to a strong resistance level. So also, again, and that's why we run the exercise on the indices. Really keep a close eye on your support and resistance, because it's likely where you're going to encounter people who have long positions, or you're going to encounter profit taking or short selling around these levels. Or in the case of, for resistance, in the case of a support, you might encounter short covering or, demand or buying pressure around those levels. So always map out your levels, even when you're using the price action pivot strategy or the trade trend algorithmic signals. Let's take one more, Richard. Got a couple minutes left.
I've got WSM.
Williams-Sonoma, one of my favorite stores. I try not to go in there because I want to buy everything. Okay, so no current trade trend pending signals on Williams-Sonoma. Again, just like most of the market today, stock shot way up over 11%. They may have had earnings, I'm not sure. Let's see. As far as a price action pivot, okay, so I'm just mapping these out. We got 1, 2, 3, 4, 5. Okay, this is a good one too. This is kind of a fun one to look at. So this is also a triggered bullish price action pivot. Right, so there's candle 1, 2. We're making lower lows. This becomes our potential pivot candle when we make a higher low, and then a confirmed price action pivot, a bullish price action pivot setup when we make another higher low from the pivot candle. All right. So our potential entries are above candle 5 or above candle 1. Now, what happened after this bullish price action pivot setup occurred? We actually had a bearish price action pivot. So you'll notice we're making some new highs here that completed the 5 candle pattern for the bullish price action pivot, but then we make a lower high. So this is actually now also a pivot candle, but it's a bearish price action pivot, because then we made a lower high and it's completed on this candle. So how many of you guys out there get whipsawed, when you use indicators or strategies? I mean, it's to some degree unavoidable. We all get whipsawed to some degree, but the price action pivot strategy is the best thing I've ever found to keep you out of whipsaws, because this is a lot of whipsawing price action. And in fact, we got a bearish price action pivot, but our shortest our nearest distance entry would have been down here. So we would have never gotten triggered. And this bearish price action pivot setup was negated because the bullish one actually followed through. So see how it would keep us out of this whipsawing and get us into the right direction. It gets us in the right direction. If we keep the right count and monitor the lows and highs, so this is a bullish price action pivot. This is a bearish. So while other people are out there getting whipsawed, Williams-Sonoma rotating lower, boom. If we had mapped this out and used our appropriate entries, we would have gotten take the long bullish price action pivot. This one would have never followed through. And let's see, if we would have hit our profit target likely today on a 1-to-1 risk reward. Beautiful. All right, well, those are great suggestions. I apologize, my voice is going out, but I hope you guys got a lot out of that. We've, again, reviewed the 36-month moving average. Keep a close eye on those resistance levels tomorrow and through the rest of the week. Practice the price action pivots. We're in the midst of some already triggered bullish price action pivots on the major indices, but you can look for them on different time frames and other assets as well. And so thanks for sharing your symbols for the ticker roundtable. We'll go ahead and wrap up with any final questions tonight, Richard.
Let's see. I think anything that came through was just kind of people looking at different tickers. So I don't really see any lingering questions there. So
okay.
Thank you guys for coming tonight.
Yeah, thanks so much, guys. And a while back, we actually held a full workshop on the price action pivot strategy. If you guys didn't attend that workshop, it included 2 full days of training of price action pivots, the indicator, and I did other indicators as well. And I did a live real money trading session with the price action pivot strategy and made money trading it for the workshop. We're actually going to bundle that into a course so that anyone that wasn't able to attend the first workshop can still attend that course. So keep an eye out for that if you guys are interested in learning about the price action pivot strategy in more detail. Probably in the next week or two, we'll be sending out information on how you can take that course if you missed the additional workshop. So keep an eye out. Just want to give you guys a heads up. All right. Well, let's yeah, absolutely. And let's keep our fingers crossed for a follow through on the great day we had today. One of the best days we've had in a long time in the markets, and keep a close eye on those resistance levels. We will be back next Tuesday at our normal time. So thanks for being flexible with us this week due to travel. And we'll resume our normal day and time at 7 p.m. Eastern on Tuesday next week. So I hope you guys have a great rest of the trading week, a great weekend, and we'll see you all next Tuesday.